Well, good afternoon, traders. And one of the concepts we were exploring late last week was the idea that we could have seen gapping risk on the Monday open post the G20 and some of the China data we saw yesterday. If you have a look at what's been happening on the market on the open, it's pretty clear that the barriers to a positive surprise have been beaten. The idea that Xi and Trump have shown a greater unity, the fact that they're looking to get together and get back on the path for renegotiation has infused the market and unwound some of their G20 currency hedges. The idea that US tech firms or the restrictions around US tech firms dealing with Huawei and some of the other Chinese tech funds more broadly has been loosened. People are, again, putting on a bit of risk this morning and unwinding some of those currency and those G20 shorts and hedges. Certainly, if you look at the equity markets and look at our calls at the moment, you can see the Chinese equity market doing really nicely there. The CN50 up 376 points, or what's nearly 3% there. The Hang Seng is closed on the session. We've got the Japanese market pushing a little bit higher, up nearly 2%. The Australian 200 there up 27 points, so a little bit of underperformance there at 66.47. But if you have a look at our European and US opening calls, you can see the flow has been predominantly on the buy side. There had been a bit of a bid throughout the session where we saw markets rolling over, but traders are starting to buy that again. If you have a look at the US 500 up 24 handles, 29.65. The interesting thing, if the market there was to open right here, right now, we'd have a new all-time high in the S&P. Trump will obviously take that every day of the week. That's kind of what I think we're seeing from the G20. It seems quite cosmetic to me that they're focusing on the financial markets there. There's not really enough in this to really give us a clear sense that we're out of the woods. And if you're the Fed or if you're in the corporate landscape assessing their supply chains, you probably haven't had enough clarity from the G20 to suggest the worst is over. If you have a look at the front end of the bond market in the US, for example, where I've got 2-year yields up about 3 or 4 basis points, so they're not really getting too carried away by this. And as we go into tonight's session, I think you really have to keep an eye on two things. By the time you probably watch this, we would have heard from Vice Chair Richard Clarida. What will he say about the G20 to give him some encouragement about what's going on? Also, tomorrow night we get John Williams, who's the New York Fed president. He'll be talking about what's happening here. And again, he's quite an influential guy, so I think you really want to keep an eye on. He's going to give an explanation as to whether we get this 50 basis point, whether we get this 25 basis points, and pretty try and guide the market as to what he's thinking there. So again, that's going to be really interesting for dollars. We've also got the ISM manufacturing numbers that comes out a bit later on tonight in Asia, into European trade, and the market is expecting a little bit of a slowdown there, but the regional numbers we've been seeing from some of the regions there have been a little bit discouraging and suggest there's downside risk to the call that we've got at the moment at 51 on that index. The market really looks at the ISM manufacturing, so I guess we probably should as well, but certainly there's some positive gains expected here. We've got the Wall Street cash up 293, FTSE and DAX looking really strong. DAX being called up 112 points for the cash open there based on what we've been seeing from DAX futures. But it's the oil price as well. Don't just discard what's been happening in OPEC. Talk is there. We're seeing agreement between Russia and the broader OPEC region to extend the output cuts potentially right through to the end of Q1 of 2020. That seems above and beyond. There's no doubt that what you're seeing there is some very positive flow towards the oil markets there. US crude just pushing into that 59 buck, up 2.4% on the session. Brent having a similar move. In fact, you can go across the commodity spectrum and see copper up 1.2%. You can see iron ore price up 2.8%, and you're seeing some good buying in energy and material stocks as well. Currency markets pretty subdued. I mean, we're seeing euro dollar down about 20 points. I think throughout this week we are keeping our eye just to get to see if we get a clarity about who's going to become the new European Commission president. If we get a German there, it's going to give us a fairly clear idea that it's not going to be a German at the ECB presidentship, and that's one we'll be watching. Dollar yen up about 43 points. That's been a big mover on the session. There's been an unwind of those yen holdings to with what we've been seeing in S&P futures today. But we know that I think this is kind of the level I think we're going to start seeing traders looking to fade into this. Aussie dollars down about 16 points. We have seen some China data both on Sunday and today, both the Taishan numbers and also the National Bureau of Statistics numbers. On the manufacturing side, just a little bit weaker than expected. Aussie's probably reacting to that. And of course, tomorrow we've got the RBA meeting. 70% chance now. We've got a rate cut being priced in. Most banks are calling for that cut. I expect to see some big volatility. You could see some big moves. So watch your exposures there as well. But certainly, markets are unwinding those currency hedges. The bar was low, and certainly they've gone above and beyond there.